Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, good afternoon. Thank you, as always, for making time.
Good afternoon, Devin.
Well, let's start with Wall Street, where stocks were up on Tuesday for a third session in a row as Treasury yields came down sharply from their highest level in more than a decade. Futures are down at the moment, though, because earnings for a few big names like Google are coming in lower than expected. What's the story in the global markets?
U.S. Stock market indexes rose on Tuesday, continuing a market rally that propelled the Dow Jones Industrial Average to a six-week high. The S&P 500 rose 1.6%, while the tech-heavy NASDAQ added 2.3%. The blue-chip Dow Jones Industrial advanced 1.1%. U.S. investors cheered earnings from large financial firms, which sends stocks higher in recent days after months of falling on fears on rising interest rates and soaring inflation. Data released Tuesday morning showed home price growth slowed sharply, sending bond yields tumbling. The yield on the U.S. 10-year Treasury note slid to 4.11% from previous 4.23% on Monday as bond price rose. Falling long-term bond yields propelled a segment of the stock market most sensitive to interest rates. All major Asian markets in Tokyo, Hong Kong, and Shanghai advanced today, along with U.S. markets, a three-straight-day rise.
Well, now here in Seoul, Korea's main stock index, the KOSPI, was higher as well, but tech shares on the KOSDAQ closed lower. Samsung Electronics continues to see a nice recovery, as does battery maker LG Energy Solution. Tell us about the domestic market.
Domestic markets are mixed today, even with U.S. markets three-straight-day rise until yesterday. Domestic investors became sensitive on bond market freeze after Lego land projects commercial pay for default, as uncertainties stemming from a default are rising quickly over all financial markets. Also, weakened Korean won and concerns on economic growth for this year still dominate market psychology. The benchmark KOSPI advanced 0.7%, but the KOSPI rise was not as much as U.S. market yesterday. KOSDAQ dropped 0.8%. In KOSPI market, foreign investors' aggressive buy led the market upside with net purchase of 612 billion won, which is much larger than average daily net purchase of foreigners. Most of large cap stocks advanced today along with KOSPI's rise. Samsung Electronics gained 3%. LG Energy Solution also rose 3.5%. But Hyundai Motor, Naver, Kakao, and POSCO declined today.
Well, now, the Wall Street Journal is among the many who are reporting that the Fed is likely to do another big rate hike next month and then adjust the pace of its monetary tightening. That could mean in December we see a rate hike of 50 basis points instead of 75. Looking at this bigger picture, Professor, what do you make of the situation?
I think that is a possible scenario, Devin. But in that news, markets' hope is reflected. Officially, U.S. Fed put this #1 policy priority on stabilizing inflation. Until the end of this year, there are two more FOMC meetings remaining in November and December. Fed officials are rushing toward another interest rate rise of 0.75% at their meeting in November, and they are likely to debate then whether and how to signal plans to approve a smaller increase in December. Some Fed officials have begun signaling their desire both to slow down the pace of increases soon and to stop raising rates early next year to see how their moves this year are slowing the economy. They want to reduce the risk of causing an unnecessary sharp economic slowdown. But others have said that it is too soon for those discussions because high inflation is proving to be more persistent and broad. Market rallied in July and August on expectation that Fed might slow rate rises. if Fed officials are entertaining a half-point rate rise in December, they would want to prepare investors for that decision in the weeks after November meeting without prompting another sustained rally.
Right. We'll have to see what they do at that point. And finally, looking at currencies, Professor, with the Japanese yen at historic lows against the U.S. dollar, reports say the Bank of Japan likely intervened in the market last Friday to the tune of 5.5 trillion yen. On Monday, they say another 900 billion yen. So we're talking billions of dollars here, even as the BOJ continues its policy of monetary easing. Big contrast there. Do you see these interventions as effective? What's the strategy here?
Japan's yen is depreciating by more than 30% against U.S. dollar from the beginning of this year. It is the largest depreciation against U.S. dollar among OECD member currencies for this year. Japan's central bank has been conducting yen buying intervention to defend the yen against sharp declines, which have been driven by widening divergence between Japanese and U.S. interest rates. Bank of Japan likely spent up to 900 billion yen or $6 billion on its second straight day of the suspected currency intervention on Monday, bringing total yen buying since last month to as much as 9.2 trillion yen. But the effect of Bank of Japan's operation on defense of yen value is limited because U.S. Fed and Bank of Japan's base interest rate gave is 3.25%. Japan's central bank, which is BOJ, keeps on the zero base interest rate policy to revive Japan's economy from 2013. So I think Japanese yen will be more depreciated until the end of this year.
All right, well, we'll keep an eye on it. Professor, with your help, as always, thank you for coming on the program today. We always appreciate your insights.
Thank you very much, Devin.